All right, welcome to Talkin' Investing. I am Tom, and as always, this is not financial advice. I want to go through a company called CleanSpark today, stock ticker CLSK. They had a big announcement yesterday, and I want to go through that. They are a Bitcoin mining company. For those of you familiar with the channel, you know that we cover Bitcoin and Bitcoin miners quite a bit on this channel. For those of you that are new to the channel, please remember to subscribe and hit the notification bell so you don't miss a video. Also, everybody, please remember to smash the like button and feel free to drop a comment below. Okay, let's get to CleanSpark. CleanSpark had a big announcement on Thursday of this week, and I want to go through the press release, talk about what it is, what it means to the company, and what it may mean to the price of their stock on a going forward basis. First, let's just take a quick look at CleanSpark, and you'll see it was up 2.99% on Friday to $12, and this puts them at a market cap of about $528 million. So they are catching up, but they are still one of the smaller market cap Bitcoin miners. So let's get to the press release and see what's going on. CleanSpark to expand mining operations in Texas with up to 500 megawatts of renewable power. The expansion at full deployment adds up to 16 exahash to CleanSpark's existing hash rate, and that's actually not even true. That is not full deployment, and we'll go into why. They say CleanSpark, a sustainable Bitcoin mining and energy technology company, today announced that it has signed an agreement with Houston-based Lancium to secure an initial 200 megawatts at Lancium's renewably powered data centers in West Texas, with an option to add 300 megawatts more in the future. So that is where they come up with the 500 megawatts in the title. So you'll see when they talk about full expansion deployment of 16 exahash, that is not of the 500 megawatts. It's of the 200 megawatts that are under contract. They have options for another 300 megawatts past that. It is expected that approximately 50 megawatts of the purchase capacity will be operational by December 31st, 2022, while the remaining 150 megawatts will be fully operational during spring of 2023. So that sounds pretty aggressive to me, but we'll see how they do. That means that 1 year from today, all of that will be operational. After completely using this capacity with the latest generation of Bitcoin mining machines, CleanSpark will add an estimated 16 exahash to its currently forecasted hash rate of 4 exahash. So that would give them a total of 20 exahash sometime in the spring of 2023. This is consistent with their goal that they talked about in their year-end earnings report. So we'll talk about that. They want to be one of the top 5 Bitcoin miners in North America. They are not in that group right now. They're on the outside trying to climb in. Well, this plan is a drastic increase in infrastructure for them. This would be a major step towards getting to their stated goal of a top 5 Bitcoin mining company. I want to go to their presentation, which they put out just less than a month ago. This is their March presentation, and talk a little bit about where they are right now. So they're talking about being top 5 in hash rate, efficiency, sustainability, and profitability. So if they want to get to that level, they need a lot more infrastructure, and this is multiplying their infrastructure by quite a bit. And I want to show you one more slide, and we'll talk about exactly how much extra this is adding. You'll see their current capacity is 74 megawatts. They've got 20 more megawatts under construction, so that would be 94 megawatts. This is talking about adding another 200 in addition to that 94, with an option for another 300 past that. So that's more than a 500% increase in their capacity to mine Bitcoin if they take the option on that extra 300 megawatts of energy. So from an infrastructure standpoint, they've got themselves set to the point where they would be one of the top 5 Bitcoin miners if they can execute this plan. Now, obviously, the other side of this plan is 20 exahash worth of machines and getting them up and running. So, there's a lot that stands between now and then. However, they are making significant progress. They have 2.2 exahash of machines running. And again, this is a company that 15 months ago wasn't even mining Bitcoin. They've gone from not even in the industry up to 2.2 exahash. They've got another approximately 2 exahash of machines yet to be delivered that are mostly paid for. So they have put huge deposits out on the rest of that. So that's going to get them to over 4 exahash. That will maximize their current capacity, and I think they're going to need a little bit of their new capacity. So in total, with the 200 megawatts they're adding, they can have the 4 exahash of machines they've currently already bought. They can add 16 more exahash to that and still be within their infrastructure. They then have an option for another 300 megawatts of energy, which using the latest, greatest machines at this point would add another 30 exahash of potential to their mining capacity. Now, the other thing is that's with today's latest and greatest machines. So we'll see what the machines hold in the future. You know, as technology goes on, you're talking about having to buy potentially 45 more exahash worth of machines. So they may get more efficient over time. I want to go back to the press release for a minute. Okay, so they're saying CleanSpark will add an additional 16 exahash to its currently forecasted hash rate of 4.0 exahash, strengthening its position as one of the top Bitcoin miners in North America. So they're reiterating the fact that they have big plans. They want to be top 5. They're not shying away from this. They're leaning into it big time. They then go on to say, Lancium is an energy technology and infrastructure company dedicated to accelerating the energy transition. Lancium's clean campuses are located in regions with access to low-cost renewable energy. So that's a key for them, low-cost renewable energy. The Bitcoin mining industry is being held to a very high standard. They are going to have to use predominantly renewable energy. This falls under that category, and obviously they need low-cost energy because that's their main cost of mining Bitcoin, is the cost of energy. So they then say, enabled by the company's proprietary Lancium smart response technology, these campuses act as controllable load resources, which provide for enhanced reliability of the power grid and encourage the growth of additional renewable energy. This is a part of the story that the Bitcoin miners have to do a better job of explaining to the world. Their usage of energy allows for the ramping up of all these new clean energy facilities. The one thing I will say is they say low-cost energy several times in this. They do not disclose the cost of that energy, so that would be an important detail to see. How much are they paying for this energy? For how long have they locked in a price of this energy? It's great that they're saying low cost, but I think we need to know, what is that cost? Because it looks like this is going to be where the majority of their machines are. Okay, so now that they've shored up the energy side of their equation, they need to get Bitcoin mining machines. We know they've already bought approximately 4 exahash worth of mining machines. They do have, I think, $39 million, they said, left to pay for the rest of those machines, but that basically means they're almost paid for in full. That's 45,000 machines, and they only have $39 million left to pay on them. They will then have to buy a significant number of machines in what is a short period of time relatively. Sometime over the next 18 to 24 months, they're going to have to start tripling or quadrupling the number of machines they have if they want to keep up with the power capacity that they're buying. So they talk about their philosophy to do that, and they basically have 3 levers that they're able to pull here. The first one is equity, and they say, we intend to issue equity for growth capital and acquisitions, not to fund daily operations. So they are going to have to do some dilution, as are all of the Bitcoin miners. Riot just did a $500 million shelf offering yesterday. So this is typical to the industry, but they have made it clear they're going to use some other levers in addition to that so that they're not just diluting and diluting and diluting their stock. So the next thing is Bitcoin. They say our approach to hodling is strategic. A 100% hodl strategy comes at a cost to shareholders, meaning all of the cash that they raise ends up being through equity raises, and they have continued dilution. So CleanSpark has not had to do very much of that. They have a shelf offering that basically they don't use and haven't used for quite some time. They've been showing you and being very transparent that they're selling their Bitcoin right now to fund their growth. They then say, we expect our Bitcoin holdings to incrementally increase over time. So they do expect to have some amount of hodling, which, looking for a balance, but they will continue to use the Bitcoin they mine to buy more machines so that they can get up to this 20 exahash. Then thirdly, debt. Right now they have no long-term debt. So that provides an opportunity to leverage their balance sheet. So they say growth plans can be accelerated with expansion of debt capital. So between equity and using the Bitcoin that they're mining, that is how they're planning on gearing up to stay on pace as one of the top 5 Bitcoin mining companies in North America. And that is a lofty goal because there's now close to 20 publicly traded Bitcoin mining companies. Many of them have come out with very big plans. We'll see if they're able to execute those plans. There's a lot of competition in this space, but CleanSpark has clearly shown they are serious about continuing to be competitive in leading this industry. Let's go to their chart and just see what's going on there. All right, this is CleanSpark's chart on the 1-day time frame. So what you have here is from November of 2021 to the present. CleanSpark was up over $23 back in November when Bitcoin was at its all-time high. Since then, it fell all the way down to $5.49, which is this red line right here. That was its 52-week low by far. What this chart is not showing, that last January, so that is outside of the 52-week window, CleanSpark was up over $40 a share. And I'm going to show you their market cap real quick because it's important to understand. A lot of people think that share price is going down because of dilution, but share price is going down and it's dragging market cap down. We saw that they're about a $500 million market cap company right now. Last January of 2021, they were over a $1 billion company, and at that time, they had only mined 90 Bitcoin in total. So they've now mined thousands of Bitcoin. Their hash rate has grown exponentially, and their market cap continues to decline. It's half of what it was just over a year ago. It peaked again at about $860 million back in November when Bitcoin peaked, and so it's still way off of that. So if we go to the chart, you'll see just to get back to its previous highs from November, which was nowhere near its 52-week high, that would be an 86% increase in the price of this stock. If we see them executing these plans throughout this year, locking down this power, getting their 4 exahash up and running, and start to hear what their plans are to get the next 16 exahash going, I would expect this to be a very modest goal. And again, please remember, this is not financial information. This is my perspective. I'm trying to put pieces of the puzzle here and give you guys information. You guys have to interpret it and do your own due diligence. It's your money. You need to make smart buying decisions. You know that. For me personally, I believe this is a very realistic goal. I think numbers much higher than this could be a realistic goal. But for the moment, this 86% to me looks like a reasonable upside. I think the downside risk is small, although they have had a big run up from $5.50 up to $12.74 in the last couple of months. So they've already recovered. However, you'll see that still leaves them way off of their highs. So depending on Bitcoin's action, there could be some downside risk to this. So, everybody's got to do their own risk reward analysis. I think there's more reward left here than there is risk, but that's just my opinion. Mainly, I just wanted to get the information out to you as to what they are doing. This is a massive increase in their potential access to power. That is really one of the core components. Access to power and access to Bitcoin mining machines are the two key elements in this industry. So they just went a long way to shore up one part of their business, and that was a big announcement. So that's all I've got for you on CleanSpark today. Thanks so much for watching, and we will see you in the next video.